Hello. Today we're going to look at problem 1-1B. Amy Austin established an insurance agency on March 1st of the current year and completed the following transactions during March. And then we have A through J transactions. Our directions ask us to indicate the effect of each transaction and the balances after using the following tabular headings. And then it gives us these tabular headings. I have already, let me drag that over to the side. I have already set this up for you in your working papers, okay? Now, you can do this on the computer in Excel, or you can print this out and you can handwrite it. It's completely up to you. I'm going to do it on the computer. Completely your call which way you do this. And you're going to see throughout the class that some of the videos are like this one, where I'm doing the assignment on the computer, and some of them I'm handwriting them. Again, completely your call. So what we see here, we're learning about assets equaling liabilities plus owner's equity. So we see our assets section are these three columns: cash, accounts receivable, and supplies. Our liabilities account is accounts payable. And then the rest of these accounts, and let me scroll over here, are all stockholders equity accounts, our common stock, dividends, fees earned, and then all of our expenses. Okay. Now our equation, assets equals liabilities plus owner's equity, plus stockholders equity, always has to be in balance. Okay. So that's something to keep in mind, that we always have to keep this equation completely in balance. So if we look at letter A, and I'm going to keep, and this is another thing, you can do a split screen. If you want your transactions on the same screen, you can print this out. You can open it on your cell phone. I actually am working from a 2-screen station, so I'm going to drag that over to my right. So when I read, I'm just reading from the problem. Letter A, we opened a business bank account with a deposit of $50,000 in exchange for common stock. Okay. So we had a deposit of $50,000 cash. So we received $50,000 cash. And we had a deposit, and we issued common stock. So right now our assets are still equaling our liabilities and stockholders' equity. Number 5, wow, I am way jumping ahead, especially since they're lettered and not numbered. Letter B, purchased supplies on account. So we purchased supplies, we received supplies, so that's $4,000 there. On account means that I now owe someone $4,000. There's $4,000 that I need to pay a bill, pay someone. So that's going to land in our accounts payable column. Our liability states things that we owe people. Okay. Letter C, paid creditors on account. So we paid cash, so we're going to have minus $2,300 there. We paid creditors on account, so we're going to have minus $2,300 in our accounts payable to say that, hey, we charged $4,000 there and we made a $2,300 payment on letter C. Letter D, we received cash from fees earned on insurance commissions for $13,800. Now, first thing it says is received cash, so we know we're going here with this, $13,800 in our cash column. Scoot my mouse out of the way. And then the other $13,800, if we read that correctly, we received cash from fees earned. So we're coming over here to the fees earned column and letter D, and we've got $13,800 then there. Again, our assets have to equal our stockholders' equity, which they do. Letter E, we paid rent on office and equipment for the month for $5,000. So first off, we paid rent. So we're going to subtract $5,000 cash because that's the amount that we have paid. And if we look at our account titles, we have one that states rent expense right here. Okay. So we have our minus $5,000 there to show that we had an expense. Letter F, we paid, we're going back to cash, paid automobile expenses for the month $1,150 and miscellaneous expenses $300. Now, in Chapter 2, we're going to be doing what's called journalizing. So transactions like this one will actually be split up into 2 transactions because you'd have to write 2 separate checks. In this case, we're just kind of separating out the transactions, so they've put them all in one. We paid expenses for $11.50 and $300. So if we add those together, we're going to get $14.50. I'm sorry, we paid those expenses. So we're going to stick a little negative number in there. We paid, let's see, automobile expenses. So if we keep going, let me move my picture out of the way here. Auto expenses is in column L. So there we're going to have minus $11.50 and miscellaneous expenses minus $300. Okay. Letter G, we paid office salaries $2,500. So again, back in that cash column, minus $2,500, and we paid office salaries. So we're going to find the one that says salary expense minus $2,500. Letter H, we determined that the cost of supplies on hand was $2,700. Therefore, the cost of supplies used was $1,300. Now, this one is very unique. This is what's called an adjusting entry. So what we're doing is we are adjusting for the amount of supplies used. Back up here on letter B, we went to Sam's Club and we bought $4,000 worth of supplies. Staples, pens, Post-its, notepads, you name it. We bought $4,000 worth of supplies. Over time, those supplies were used. We used the Post-its, we used the pens, we used the markers, okay? Things are starting to disappear. We have gone back to our closet, which originally had $4,000 worth of supplies in it, and we have counted what was left, okay? And in that closet, there's $2,700 worth of supplies left in that closet, which means we take the $4,000 that we started with minus the $2,700 that we used, that's left in the closet, then we get what was used, which was the $1,300. Okay, so we need to subtract that $1,300 from our supplies. We've used that much in supplies. We've used that much toner for our printers and that many ink pens. Okay, what we're going to do with this $1,300, because our balance in order to balance our equation, is we are going to show that that $1,300 is now an expense. Okay, so $1,300 of that asset of supplies, of things that we owned, now became an expense. It's things that we've used. Okay, letter I, billed the insurance companies for sales commissions earned. Now, if we look at our account titles up here, we have one that's called accounts receivable. And accounts receivable is there to keep track of how much money companies owe us or our customers owe us, okay? And that's what's happening in letter I. We've billed insurance companies for sales commissions earned. In other words, we have these companies that owe us $12,500. So on letter I, we are going to increase our accounts receivable by $12,500. We are also going to increase our fees earned by that $12,500 because that is money that we have earned in our insurance business. Okay. I don't like that. Okay. Letter J, I was trying to get everything to fit on one screen, but that's not happening. Letter J says paid dividends of $3,900. Okay, so we want to pay dividends of $3,900. Oh, there we go. That's what I wanted to happen. So if we paid them, we're going to subtract $3,900 from our cash, and we paid our dividends. So we're going to subtract $3,900 from there to show that we sent out those dividends. We've what's the word that they use? Distributed those dividends. Okay, so we've done all this. Now we want to see, is our equation still in balance? Okay, so we're going to total these columns. Now I'm going to use Excel. In Excel, if we type in equals sum and put in that first parenthesis, I can then click and drag on the cells that I wanted to add and press enter, and it automatically adds them. Okay. Now, something really, really super cool about Excel is you'll see right here, I have a white plus sign. So I can click on cells with that white plus sign, If I put my mouse in the bottom right-hand corner, it turns into a black crosshairs. If I click and drag this straight across these columns, it will automatically add each column for me, which is fantastic. I love the magic of Excel. If you are doing this by hand, please feel free to use your calculator and add these up. Okay, but again, I just use the equal sum formula, or you can add them up with a calculator and just type the answers in. That's fine too. Now our equation is assets equals liabilities plus stockholders equity. So we need to know what is the total of our assets. So I'm going to come here and I'm going to use that sum equation to add those three cells together. And it tells me that my assets are $63,850. Now we want our assets to equal, whoops, that was not my intent, our liabilities, which were $1,700, plus, nope, still not my intent, text, okay, plus, I'm going to center these. You don't have to do all this. I'm just doing it so that you can see better what I'm doing. Our stockholders equity. And again, I'm going to use that sum feature. Stockholders equity starts at common stock, goes all the way down to my expenses. So here's my question. Does $63,850 equal $1,700 plus $62,150? I don't know. Let's find out. Yes, it does. My equation is in balance at $63,850. So that means, let me make this clear. That does not mean that you got everything perfect and your numbers are all in the exact right spots. But it does mean that you kept the balance between your assets and your liabilities and stockholders' equity. Okay? Always do that check just to make sure there aren't any glaring mistakes. If you have any questions while you're working on this problem, or when you're done with the problem and there's things you don't understand, please feel free to email me using your inbox over here on the left. Thank you and have a great day.